Welcome to our February the 4th, Monday podcast. We're going to start with a look to the week ahead and some of the items that can be expected on the scheduled results. Turning to some of the UK stocks, we are entering into the UK reporting season. Now, we're largely through the US reporting season, which was reasonable. The UK side, therefore, is going to be picking up interest. Tomorrow, we're going to be keeping an eye on BP. Shell last week published results. Their numbers came through. There was probably about a 10% miss to consensus forecasts for Shell in the fourth quarter, but the share price largely ignored that miss and really was taken more by the tremendous cash flow that is expected to come out from Shell over the course of the next couple of years. It certainly allowed Shell to pre-release some thoughts about where their dividend will be in the first quarter of 2013. So a slightly unusual departure for Shell, and that provided quite a healthy backdrop to this sector, where the shares of BP, Shell and indeed BG Group have been running at around twice the market growth since the start of 2013. We've seen sort of mid double-digit growth, 13-15%. So hopefully BP can keep the good news flowing, and of course BG Group. BG needs a sensible statement, given the fact that the last statement did give those profit guidance cuts over production. So whilst the bad news hopefully is in the price now, a steady statement from BG, and hopefully we can see the continuation of the recovery of that particular stock. Technology group Arm Holdings is coming out. That share price is certainly holding on to near all-time high levels. The stock trades on around 50 times earnings and has been benefiting from obviously huge growth in the underlying products that their technology is involved with. There has been muttering in recent days about their potential competitive threats from Intel, so maybe they'll be looking to address some of those issues. Really just looking further ahead in the week, we've obviously got some big heavyweight stocks like Vodafone that's been recovering quite well over the course of the last few sessions after a slightly disappointing end to 2012. On the macro front, incoming Bank of England Governor Mark Carney, he'll be around later in the summer, but he addresses MPs later this week, which should be interesting, hopefully just to try and gauge a little bit more understanding of this individual and what he will do with policy, when he will be making his mark there. We'll be having the MPC and the ECB announcing interest rates and QE programs. Given the strength in equity markets and the recovery in sentiment that we're seeing at the moment, no real change to policy expected from either of those organisations. On Friday, a little bit of data out from China, and I'm going to be particularly interested in trade balance numbers from the UK, US and Germany. We are seeing much more volatility in currency at the moment, and that is one thing that could get impacted by that move in currency. That is the trade balance numbers. So a look ahead to Friday. So taking a look at some of the issues for the week ahead. Well, I mentioned currency, and I do want to continue to put these charts in to show the extent of the moves that we're seeing, particularly for the sterling, which has been a very weak or notably weak performer against two of its major counterparts. This is against the euro. We're certainly well through the sort of year low that was seen around the 118 level. It did touch 114 in late trade on Friday. It's rallied a little bit. We'll talk a little bit about the euro and why there might be some softening coming in, but the pound has been weakening quite sharply. As a feature, this is the euro versus the dollar, and we can see again it has pushed through to potentially uncomfortable levels for some of the weaker European economies at the moment. Did nudge 137 at the peak, but just sub 136 as I speak at the moment. So hopefully may have taken the top off the euro at the moment, or else I think as we approach the G20 conference, there will have been sort of increased mutterings from worries about the strength of the euro at the moment. Banks are going to feature. Very shortly George Osborne will be talking, and some initiatives there to electrify the ring fence to ensure that retail banking operations are protected from any nastiness from investment banks. RBS is possibly most exposed to that. They've got a scandal over LIBOR, which is expected to result in some guilty confessions to regulators and a £500 million fine. I bring RBS up purely because the stock did fall 10% last week, which was a notable underperformer versus the banking sector, and there is continued talk that banks, in particular RBS, will need more capital by the end of the year. Barclays their business model possibly very much exposed to anything that George Osborne is going to be talking about, given the bar cap business and the retail side of the business. But we've seen the resignation of possibly the last two of the individuals who have been present over the Barclays tenure over the last sort of 5 or 6 years. So it's fairly much a new management team there, and on February the 12th, new CEO Anthony Jenkins will be laying out some very detailed formulas and analysis of where he expects to take Barclays over the course of the next 10 years. He thinks it's going to be a 10-year project, and obviously I think one or two of the board members probably don't see themselves there for 10 years, so feel it's right time to step down at this stage. Coming back to the equity markets, well, they continue to enjoy good trading. Through January we saw 6-7% growth, which on equity markets, the best January start since 1989 for US and UK equities. US now has burst through that sort of top that was seen in 2007, reclaiming the 14,000 level. One market that went in the opposite direction, it was Spain last week. The short selling ban that has been in place in Spain for many months now came to an end on 31st of January. It is notable to say that it resulted in some fairly sharp falls in the Spanish market. There is also a situation developing in Spain at the moment where claims of slush funds surrounding the current Prime Minister there is beginning to impact on sentiment in Spain. And I'm going to pick up here on the 10-year yield, which is the Spain 10-year yield. Okay, it's still not reaching anywhere near the heights that it had during the height of the financial crisis, but we're starting to build a little bit of a trend in rising yields in Spain at the moment, and that potentially needs watching. A spike up back above 5.5% around this level, and I suspect it will bring that one back to the front of investors' minds at the moment, and that potentially could result in some wobble in the euro currency. Finally, just in terms of stocks, one we're highlighting this week, Imperial Tobacco. They had results last week. They did disappoint. European volumes were down, and unexpectedly down in December, and if those trends continue, there is a suspicion there'll be some further downgrades to earnings for this year. Those downgrades in volumes are coming because of the economic problems, and a feeling that is encouraging more illicit imports into those countries, and avoiding obviously the branded goods from Imperial Tobacco. So they do have volume problems. Did cause a little bit of weakness, but we did hear mutterings of some bid speculation there. One of their big holders is Japan Tobacco, and thoughts that they may want to mop up. That's pure speculation, but we do think from an investment case that pullback in Imperial Tobacco represents a buy opportunity.